The banking crisis and housing market concerns. It's 2008 all over again. Hey, this is Dave with the Bolduc Realty Group. Welcome to my weekly real estate market update. Today's March 31st. It's the end of the week and the end of the month. Hope you have great plans for the weekend. Before we jump into all the banking crisis and how it's going to impact the market, please like, subscribe, ring the notification bell. Comments down below are always welcome, questions as well. Let's talk about some key metrics in the Connecticut market today. Active on the market, 3,449 versus 3,435 last week, so we're up 14. Listings and active houses are pretty flat, up a little bit. We've had a lot of new listings come on, 224 over the last 24 hours. They're just going under contract. So we do have a lot of demand out there. I expect the inventory to continue to climb. And remember, inventory is seasonal. It goes up in the summer, down in the winter, very normal. We closed 2,100 houses in February. We're at 2,469 right now in March with 1 day left. I expect we'll get to around 2,800 by the time it's all said and done for March. We're at about 1.6 months worth of inventory, so still very low. So some key dates here. Relatively good news in inflation and spending, along with the Fed actions and statements, resulted in a nice decline in mortgages recently. It's welcome news for buyers. The Personal Consumption Expenditure Index, PCE report, came out this morning. It was at 4.6% up versus expected 4.7%, so it was lower than expected. This is good. It's the lowest it's been since the end of 2021. Inflation is still here, but it's easing off, so that's good news. As March exits like a lamb, there's still a lot of FUD out there, though, fear, uncertainty, and doubt, and especially related to the banking crisis and the housing market. There's a lot of misinformation about what the impact these issues will have on the housing market, and it's causing some confusion. I hear from a lot of people, home prices are overvalued, the market's going to crash. I used to try to explain the data doesn't support that, but nobody really listened. So I kind of changed my tactics, and I ask people now, why do you think that? What's your opinion? And I'd love to have your opinion. Throw it in the comments down below. When I dig deep enough with people when I'm asking these questions, it consistently comes back to more of a personal desire to not pay the price that's out there rather than any specific economic data or unfavorable situation or something tangible. So let's talk about that. One issue that people bring up is recession. Now, whether you believe we're in a recession, going into recession, doesn't matter. We're either in one or we're not, and there's a lot of concern that that's the case. Recessions do not mean housing crashes. 2008 was an anomaly. 2008, the housing crash caused the recession. So keep that in mind. 2008 the recession was caused by the housing crash. If you look at this data here, you can see that in all these recessions, housing prices are up, then they're down, then they're up, then they're down. That tells me that the fact that there's a recession does not drive housing prices. The conditions in the economy, in the market, drive a recession, and that may or may not impact the housing market. So we got to look at the specific conditions to understand what's going on. Looking at specific conditions, 2008 versus now, population in Connecticut versus a number of houses. Population was in 2008 about 3.5 million, round numbers. It's 3.6 million now. The actual difference is a little over 80,000 people, 2.3%. Not a huge change, but up a little bit. The number of homes for sale in 2008 was 30,000. It's now 3,400. The difference is almost 27,000 or almost 90%, just a little bit less. To put that in broad perspective, for every 10 houses that were for sale in 2008, there's one for sale now. We have a supply problem. Prices will continue to rise until supply and demand equalize. It's really no more complicated than that. The market doesn't care about opinions, desires. It's looking at what the conditions are out there and reacting according to those conditions. And people that they're looking to buy, you can buy now or you can wait. Completely up to you. Home prices over the last year went up 5% from February 2022 to February 2023. They were predicted to go down between 3 and 5%. So that's a big difference. They're now predicted to go up over the next year. So let's assume they go up another 5%, which is kind of the forecast. So March 23 to March 24. And interest rates dropped to 5.5%, which is what I think will happen by the end of this year. If you buy a $300,000 home now, you're locking in today's purchase price, you're locking in today's mortgage rate and mortgage. You're avoiding the increased rent because rents are going up like crazy. And if rates go down, you can refinance. If you wait a year, you're going to pay at least that 5% more, which would be $315,000. And the reason I say at least is because the lower interest rates are going to bring more buyers into the market. More buyers means more competition, means more offers, means higher sale prices, and more of those, multiple offer situations. So this has played out over the last several years. For example, home prices are up 40% since 2019. I had people that were looking in 2018, 2019 said, we're going to wait a year or two. They're hating it right now. Imagine if you were able to go back in time and pay 2019 prices, 2019 mortgage rates, and be sitting here now in 2023 with 40% equity. It'd be nice. Something to think about. The primary mortgage market survey, 6.32, down from 6.42 last week. Mortgage rates continue easing on the relatively good news in inflation and the future plans that the Fed talked about. The PCE report today added to that good news pile. Consumer and wholesale inflation reports are due again in the next few weeks. So we'll see if those positive trends continue. We should see the mortgage rates continue to track down. Let's hope for the best on that. That's what I have for today. Comments, questions are always welcome. Have a great weekend.